is just the beginning to containing current account deficit?
Well, basically, I would start by saying that the policy decision, it was on expected lines. It was already expected by the markets, by many of the investors, that no major changes in the interest rates is expected. Why? Basically, the main aim of the Reserve Bank of India currently is to save rupee or saving the rupee. This month we saw lots of measures announced by Reserve Bank, measures announced late in the night also to save the rupee, so much so to tighten the liquidity. And today also the main stance of Reserve Bank was saving the rupee. Previously, there was a dilemma between inflation and growth. Now Reserve Bank today has said that our aim is to save the rupee. Next, when the rupee problem is solved, which it has said that in a calibrated manner, it will make sure that the policy decision which it took place in this month will be rolled back. The aim will go back again to growth. Well, talking about CAD, it has yesterday also raised serious concerns over CAD. It said that for the first quarter of this financial year, the CAD is expected to be huge as compared to the previous quarter or the last quarter of the last fiscal. The CAD for the last quarter of last fiscal was around 3%. And in the third quarter of last fiscal, it was 6%. But it is again expected to rise and give kind of headache to the government and to the policymakers, because the riding CAD or the current account deficit will surely impact the Aam Aadmi, because it will indirectly affect the inflation. And if inflation rises, it's a concern for everyone, from the government to the person on the street.
Right, it's a concern for everyone. Also, Sidhant, the RBI governor said that these policy measures are aimed at addressing risks of macroeconomic stability from external sector.
Well, external sector involves, of course, the global factors. We know globally it's not a good position. We have seen that it's a downturn across the world, whether it's United States or China, and probably India is going to be caught between both the downturns from the US and the Chinese downturn. Recently, the Chinese growth figures came and they were down to around 7%, and this is huge for one of the second largest economy in the world, and is going to obviously directly impact the Indian scenario. Secondly, there are also concerns that the Federal Reserve, which parallels the Reserve Bank of India here in India, is going to take back the stimulus package, the US stimulus package, by the end of December. Withdrawing the stimulus package means all the FDI, the FIIs, the foreign investment across emerging markets is going back to US. This obviously has wreaked havoc with currencies across emerging markets. It's not only that Indian rupee is literally in a weak position, it's other countries also, though Indian rupee is one of the weakest currencies in Asia right now, but it's going to obviously impact our currency, our economy, and that is the concern which the Reserve Bank of India highlighted today.
Right, Sidhant, also one last thing I would like to ask you, not a very good news, of course, the GDP forecast has been brought down from 5.7% to 5.5%.
Yeah, of course, this is a bad news also, that the GDP figures have been cut down. And of course, the reasons behind this is that the economy is weakening. And I would like to add another point, that yesterday also and today also, the Reserve Bank said that government needs to take urgent steps so that the current account deficit is controlled, and also reforms. We know that the government is on a reform spree. The second wave of reforms was announced earlier this month, and last year also we saw FDI being announced in major sectors like multi-brand retail, single brand retail. And yesterday also the Etihad deal got a go-ahead, a nod from the FIPB, and now is expected to the cabinet, and where possibly it will get a nod soon. The government is making sure that reforms goes ahead, because that is the only way that India will get FDI, and when FDI comes, the dollars are expected to come, and this will probably help bridge the current account deficit, which everyone is talking about.
All right, Sidhant Sibal, our correspondent, joining us.